Hello and welcome. Well, on the event of HCL Technologies announcing its first quarterly earnings, well, I'm in conversation with the management team out here, and I'm actually talking to Aparna VV, the Chief of Human Resources with HCL Technologies, and we also have Ajit Kumar. He's the President of Applications and SI Delivery. Gentlemen, good morning and thank you for joining us. I'm going to start off with Ajit. I want you to tell us a little more about the evolution of applications because a lot of investors out there still really do not understand in depth about what the company does. I want to understand how it has moved over the past 2 or 3 years and where you see it moving and what role HCL Technologies has to play as we move into the next couple of years.
Sure. So if you look at HCL from an overall perspective, you can look at the company from many different dimensions, a geographical dimension, an industry dimension, or a service dimension. From a service perspective, which is probably the right way of looking at it to answer your first part of your question, applications and systems integration constitutes about 37-38% of the company's revenue.
Right.
It's about the same size as our infrastructure business, which is also around 37-38%. Then we've got an engineering software business, and then we've got a BPO capability. So if you look at it from a service lens, HCL is infrastructure, applications, engineering software, and BPO.
Right.
Now, from an applications perspective, you can roughly look at our business as application run and application change.
Right.
And today our mix is about 60-40. So 60% of it is application run and 40% is application change. Of course, one must keep in mind that these traditional barriers between application run and application change are beginning to go away.
Right.
Because of a lot of technological evolution. But still, just looking at it from a more acceptable lens or a more well-known lens of run and change, it's about 60 and 40%.
Right.
Now, if you look at these businesses, the 60% of the run business, the single biggest influencer there is really around automation. And that's what's making the significant impact as far as that part of our business is concerned.
Okay.
If you look at the change part of our business, the big impact driver there is digital.
Right.
Now, digital obviously is a very broad spectrum of issues that one tackles, but effectively, if you look at any change program that companies are undertaking today, it's largely around their attempt to be more digital.
Right. Right. So, Appa, I'm sure that the challenges when it comes to hiring and reskilling will also change. In that case, when you take a look at the next 2 or 3 years, what trends are you going to anticipate and what steps does HCL Technologies need to take in order to get these changes going in?
Okay. So I'll break it into 2 parts. One is the transactional part and the other is the strategic part.
Right.
As Ajit mentioned, 60% of our business is run and 40% change. While this 60% is coming down because of pressure of automation and improved productivity, the change part is growing. So that's where the new technologies are coming in digital. So now, are these workforce people with these newer skills, are they available in the marketplace? They are available only in small numbers. They are not available at scale. Right? And also they are not available at the desired price point from an industry perspective. So it's a combination of how do we train our own internal folks to meet a large part of the demand and augment them with the limited people who are available in the market space. That's in the short run, that is the step we have taken. So if you see the training numbers, what we have, last year on these digital technologies, we trained around 27,000 people, whereas in this quarter alone, we trained 11,500. So as the business on digital started increasing, you have seen that we reported a 8.2% Q on Q. The training also is accelerating. Right. And we also started implementing new tools with artificial intelligence and machine learning, which can cut short the time cycles in which we can onboard people. Earlier we used to take approximately 36 days from the day somebody raises a requisition to recruitment, giving an offer. Today we brought it down to 23 days, and we expect to bring it down to 13, 14 days by the end of this financial year.
Right.
So a lot of automation we are bringing in to accelerate the recruitment. A lot of acceleration we are bringing in terms of training our people.
Okay.
As we go forward, we want to go backwards in terms of getting people from the colleges.
Right.
And providing that intervention. Today, our intake levels at the entry level are slightly lower because customers are expecting full stack engineers, which means the person should know how to develop, how to run, how to release, all these skills, which are very difficult to get in someone who is coming fresh out of the college.
Right.
So we have a huge intervention program which is going backwards, working with the institute so that they come prepared to a large extent. So those are the interventions.
Okay. So as automation also comes into play within the company itself, do you think that the rate of hiring will decrease over the next few years as well?
It depends on the growth rates, and we are growing at double-digit growth rates. But if you see the revenue per employee is also increasing.
Right.
Because the low-end jobs are getting automated.
Right.
Okay. So obviously the numbers you hire will be muted till the industry reaches that growth levels.
Right.
So the numbers will be definitely lower, but they are not going to go away.
Okay. Ajit, you did mention about the boundary between change and run disappearing slowly and steadily. At this point in time, you still have more than 50% of your business coming in from just run. Can you tell us a little more about how this can, or how you see this develop as we move into the next few years specifically? Will it just be about changing business then, or is that a correct way to look at things?
No, so what, when you look at next generation deals that we are talking to our customers about, customers are basically looking at many of these deals in a more integrated manner.
Right.
So they're coming to service providers like us and basically saying, we want to give you the entire run and change portfolio.
Okay.
Tell us how you will bring down the cost of run and increase the dollar spend that is available to the company for change. And that is where this whole integration of people, processes, tooling between run and change really becomes paramount.
Right.
So the answer to your question would be, yes, you are going to see less requirements for run, but what you're also going to see equally is more demand for change.
Right.
So the whole question is, how do you bring the entire operating model together so that you don't look at these as silos? And bringing that operating model together is about people, it's about tooling, it's about processes. So that's what really clients are looking at. So if you look at some of the deals that we are signing, and I think it was announced yesterday about a large deal with Nokia.
Yes.
It's a good example of a deal where the client has given us both run and change, and basically they're looking at us to really say, how do you kind of drive more efficiencies in my run to free up dollars for change.
Right.
And how do you ensure that change is done in a way so that the intensity of labor in the run is reduced? So you bring in more automation, you put in more, more robust tooling, so that basically the requirements of maintaining the system comes down.
Right.
So that's the whole evolution that is now happening in terms of with the digital systems that are being built. There's a lot of automation, there's a lot of machine learning, etc.,
right,
which is being conceptualized as a part of the change program, so that the intensity of what you need to do at run reduces.
Okay. Appa, how is your assessment of an employee changing now? I'm sure that deliverables will change. What you expect from an employee will also change. Will it be about innovation, or will it be about a certain set of targets that your employees have been given? Will it be a combination? How is that changing, as you say, for example, if you're looking at an outlook over 2-3 years?
So definitely they have to be multi-skilled.
Right.
Earlier, a tester is a tester. Now testing as an independent role is diminishing, right? So it's becoming part of the responsibility of a developer to test, to maintain all those. So, and in the process, they also have to collaborate. Right, so everyone is taking one feature and developing it, and in the process they interact with the customers. So the communication skills are becoming very important. So we are looking at employees at a in a very holistic way. How do we impart all these things? First, there is an assessment framework. We assess, understand what gaps they have, and then there is an intervention program in going. So even the earlier part also, like I mentioned about the digital skills, where unique employees of 11,500 have been trained. At the in the same token, we trained almost 16,000 people who are in the run part, right? Because there also the skills are next gen skills, like I mentioned. It is not just a testing skill or a Java skill or a PL SQL kind of skill, right? It is so like infrastructure. If you see, how do you train people on hybrid infrastructure, on cloud infrastructure, right?
Right.
So these are next gen technologies which are coming. So we are training them. So though we are calling them mode 1 trainings,
yes,
a large part of it is next gen technologies which are going to be useful as they go forward.
Okay. Okay. Ajit, once again, when it comes to applications, which is extremely crowded right now, extremely competitive right now, what is HCL Technologies doing? Is it creating a niche, or is it going for as many areas as possible right now? Is it specializing in few areas, or where are the opportunities coming from?
See, first is to remember that the intensity of competition in this marketplace has never been more in the past. It's always been a highly fragmented market.
Okay.
In fact, if you look at statistics, I don't think any single service provider has even double-digit market share in the services market. So it's a highly fragmented, competitive market, and it has been that way for very many years.
Right.
But having said that, I think the difference right now is that basically there are newer technologies, there are newer ways of doing things. So therefore, your traditional competitors are not always the most formidable competitors. You could find smaller companies coming out of basically the woodworks, so to say, and really bringing in some niche capabilities which leverages new ways of doing things as well as the newer technologies.
Right.
But coming to more from our perspective, I think there are clearly some focus areas for us. We are very focused around helping clients to drive digital change programs at scale.
Right.
That's really one focus area for us. We still believe that there is a lot of opportunities from the point of view of enterprise packages. So we have a good footprint in SAP. We think over a period of the next few years, there will be large-scale transformation that clients will undertake of their SAP estate simply because of the changes in technology and newer versions of SAP, the product that SAP is releasing into the market. Similarly, we have a significant focus around Microsoft Dynamics, taking forward our partnership with Microsoft, both from the ERP workload as well as a CRM workload. So from an overall perspective, those are probably some 3 or 4 focus areas for us, which we believe will provide us the growth going into the in the next couple of years.
All right, well, looking forward to what HCL Technologies does in the next couple of years. Ajit, Appa, it was a pleasure speaking with you. Thank you so much for your time.